Big news this week. White House talking about capping the interest rate on credit cards. Now, I have my own views about it. I'll leave them in my back pocket because I've been in finance for a long time. But that's not what we're talking about today. We're going to talk about the bigger picture. If homeowners are seriously in big debt right now with revolving credit cards and student loans and all sorts of different things, mortgages and car payments and whatever it might be. I mean, things are expensive right now. They're stacking debt. So what we're going to do today in this training is talk about how to help these homeowners consolidate possible debt to still get the home improvement projects that they want done. So we've got some solutions over here, and I'm going to break down why this whole thing is kind of important, because we can't just sweep it under the rug. You're the contractors that are showing up to offer and sell and promote the services to help people better their homes, increase their value, fix the things that they need fixing. So let's dive in today on why this is so important, because it's real. Consumer debt is real. Your home improvement projects that you install are real. So if you're getting we can't afford it because of ... too much debt, too many credit cards, not enough budget, what do we do about it? Well, I'm a solution provider. Now, is this right for everybody? I don't know, but at least I can provide you the solution so you can learn how it might help you help more homeowners at the point of sale. That's what we're going to break down today. So let me get rid of my big fat head. I'll move myself out of the way. This isn't about me. This is about you. Okay, cool. So the reality homeowners are facing right now. Homeowners may not totally be broke yet, but they could be extremely pressured and overwhelmed with what's going on in their wallet, their savings account, their checking account. I mean, matter of fact, there's studies out there that have proven if an emergency happened in someone's home, not many people have cash on hand to get it repaired or replaced. And that goes for like a transmission in a truck and just like normal things. People just don't have tons of cash laying around. Let's break it down furthermore. Credit card balances are at an all-time high. And it's not just the credit card balances, it's the interest rates on the balances that never allow a consumer to really get in front of it. Why? Because their revolving credit card debt is revolving. An installment loan has an end point. Like a home improvement unsecured installment loan could be 2 years, 5 years, 7 years, 10 years, 15. Improvifi, we go up to 20 years. Yes, 20 years seems like a long time. It is, but there's no prepayment penalty. So if somebody does take out an installment loan, there's truly an end date to it. So the principal and the interest on a simple interest loan pay that debt down, which is really great. And that's why whenever you can offer a financing solution to a homeowner at the point of sale, that's why we always lean in on installment loans with an end date rather than a revolving credit card. Now, there's a couple companies out there that do that, like maybe the Wells Fargo, maybe the Synchrony, right? When you get those cards at Home Depot. But I don't know, man, a lot of homeowners can't get out from credit card debt, and that's why, because they just pay the minimum monthly payment, was typically just the interest. So monthly payments are stacking up. Industry-wise, insurance deductibles and insurance policies are higher and changing, and they're saying no more often now, right? A lot of roofers are moving to a retail process. Home improvement costs have increased. No kidding. It's called inflation. It just is what it is. Things get more expensive. So if you're only offering cash or basic finance, you might be missing out on these sales. You'll lose that deal before it can even be approved if you don't have some of the things that we're going to talk about in today's training. So let's dive into that. First, let's talk about why deals can stall. Well, here's your guy on the bike, most famous meme, needs a roof, has too much debt, and there's your rotted roof. And that's end of the story. If they don't have the money, they don't have the money. If insurance didn't cover it. And that's where we see all these blue tarps all over the place. This is just reality. And this could be needs an air conditioner, needs a garage door, needs windows. It could really be anything. It's kind of the truth. So it's usually not the project price, it's the monthly payment pressure that can get people to say no because of their existing debt, because of cash flow stress, one of the number one reasons for divorce is cash flow, right? When the homeowner says we need to think about it, there may be a hidden obstacle or hidden objection to, hey, look, we just can't handle another payment. So what we have here is the missed opportunity. Most contractors only finance the job. Credit cards stay active and the debt is high. High interest debt stays untouched. I call that revolver hell. I just talked about that 2 slides back. Monthly pressure remains high, consumer stress. We've got some great solutions here to help solve the entire financial picture, not just the project, because we have a couple cool things here that we can actually wrap in the existing debt to get them out of that pain point. So what debt consolidation means? Debt consolidation means combining high interest rate debt plus the home improvement project to put into one affordable monthly payment. Okay. Oh, look at that. I made a spelling error. Huh. Well, at least you know AI didn't do this. But that's a whole goal, right? It couldn't just be credit card. It could be anything. They could owe X on Y. They could have maybe, I don't know, an auto loan that they did a buy here, pay here at 30%, and they owe $10,000 on. We can wrap the $10,000 home improvement, give them a $20,000 low monthly payment option. So what this does is it gives your customer less stress, a cleaner financing solution, one low monthly payment option. Homeowners don't want more debt. They just truly don't want more debt. Nobody raises their hand except for business owners. They say, I want debt, because they are smart about using debt, but they want better help with structuring it. And that's what we do over here. Let me give you an example. So a real world example is a homeowner situation where they have, let's say 3 credit cards totaling $18,000 and it's a $27,000 shingle roof. We could wrap that stuff together. One loan, $45,000 and $327 a month. No dealer fee. I could do a 5, 10, 15, 20, 25 or 30-year term on that with no prepayment penalty. So what this does is just gives them one monthly payment and it gives them an end date to pay off principal and interest. So the old outcome is multiple payments, pressure, high stress, no decision, no end game, right? So our solutions can be combined into one loan, lower monthly payments to move more projects forward. Now, look, not all of your customers will say yes to this, but imagine you as a contractor showing up and saying, hey, we've got some financing solutions through our consumer credit center that might help put you in a better financial position. Now, if they say no, it's okay, but you can be the contractor that cares and has empathy. So financing options through us, what are they? Unsecured personal loans, secured home equity style type loans through Improvifi, no dealer fee on both of those. Long-term options up to 20 or 30 years. Again, do we necessarily really want to take out a $25,000 home improvement loan over 30 years? No. But what if that's the only payment that your customer can afford to get the thing done? Give it to them. They can sell, when they sell their house someday in 2 or 3 years, when the markets change and people can actually afford new homes and real estate interest rates are better, they can pay the loan off with the proceeds. So just because you're giving them a 20 or a 30-year term doesn't mean they're taking it out that long. What you're simply doing is providing the solution for the lower monthly payment. But you can let the consumers decide what term that they want. You don't have to be pressurous. You don't have to force them. This is all done at the point of sale, soft credit pull application, no prepayment penalties. Giving them multiple lending paths to say yes to you is a better way to sell in 2026. I can imagine your competitors, if they're not listening to this or learning this or a client of ours, they're not even doing it. They may not even be offering financing solutions. They're dead. They're in quicksand. So why monthly payments wins? Why does it win? Well, most homeowners care about cash flow. They're on a budget. Most homeowners are used to monthly payments and budgets, meaning what? Like my mortgage is X. My car payment, my truck payment is X. My wife's car payment is Y. We have Hulu. We have all these subscriptions. We have electricity. Everything's on a monthly basis. Our HOA is like, that's why monthly payments win when you're looking to do debt consolidation. We're not really pushing the 12-month or the 18-month, same as cash on this. We're pushing budget when we're looking to do debt consolidation. Interest rates are important, but getting out of debt is more important. What does that mean? Well, interest rates can start at 6.90 and go up from there depending upon the credit and equity of your customer. But still, even let me pick something ridiculous, 16.99% it seems like a pretty high interest rate, right? But wait a minute. To that example I said earlier, what if they have 7 credit cards at 35% and it's a revolver? That's ridiculous. But if you can help somebody get into a debt consolidated and home improvement loan at interest rate for a period of time, wrap it all into one, it doesn't matter what the interest rate is. It's about getting that debt paid off, wrapping it in one, and making it affordable. So don't lean in so much on what the interest rate is. Look at the overall solution. Longer terms can give lower monthly payments. That's right. Like when you buy a house, you have a 15-year mortgage option or a 30-year. Most of us are choosing 30. Heck, they're even talking about doing 50. Why? Because nobody can afford anything. This is exactly what this is all about. What it does is it reduces risk and it gets you increased approvals. When to introduce debt consolidation? When they say, I have too much debt to move forward with you. It seems kind of obvious, but you have to ask great questions. When they say, we need to think about where we will find the money. We don't have the money. We need to go find it. This is a great time to introduce something like this. It's not pressurous. This is protection for your homeowners. It's showing them that you care. It's showing them that you're educated. It's showing them that, look, I'm not just here for the sale. I'm here to help you. And that's a new way to sell, by the way, in 2026. The question that can unlock the deal, here's kind of like a script that you can use. Now, Improvifi clients have access to me. They have access to my team. They have access to the deal desk. They have access to school. They have access to the community. They have access to private trainings on Tuesdays and Thursdays. They have access to live training on Wednesdays. I fly out and do fly-in consulting for some of my clients throughout the year. We spend a lot of time training. We spend a lot of time talking about scripts. So, hey, you carry any high-interest debt that makes the monthly payments feel too tight? This sounds like a Chuck Toki thing. It really does. Hey, are you carrying interest debt that makes monthly payments feel too tight? I probably can't see it as well as him, but this shows empathy, understanding, questioning, not interrogating, and it shows leadership on your part that you care to help them. Now, there's a ton of scripts we could build out for you. This is just an example of one. If you sense that your homeowners won't move forward because of affordability, because they've got tons of debt, it's okay to ask them this because you care. What's the worst thing that they're going to say to you? Not interested. Okay, but at least you offered it. What else can you do after the sale? You can follow up. Say, hey, I've structured some stuff. You had mentioned that you had credit card debt. Let me show you what I've put together for you to see if our debt consolidation home improvement loan will help you. Show them that you care. All right, here's a picture of our app, all right? So here's our process. It's quite simple. We don't overcomplicate many things here at Improvifi, albeit it probably sounds like we do. We don't. I break it all down. You open up the app. You can structure the deal through our calculators, our best, better, good, our standard calculator. You can do a soft credit pull from super prime down to subprime. Secured loans, unsecured loans, and personal loans. You can review the approval options when they click the QR code. You can match the goals to their terms and help them decide which particular product might be the best for them. That's selecting the best payment options. And then they can move forward confidently. And remember, you're not here selling loans. You're presenting options and solutions for them to make a better buying decision. You're a consultant. You're not sneaky. You're not the slimy sales guy that's scamming them and trying to take advantage of them. You're trying to help them. I guarantee if you can help somebody get out of debt and give them a home improvement, you're a rock star. You're probably looking towards that 5-star review and more referrals. It's another thing. How do you get more R4 method in your life? Reviews, referrals, rewards, and retention. Become a consultant, not a slick, slimy salesperson. Help them. Ask great questions. Why do our contractors win at Improvifi? Well, there's a lot of reasons, but when we're talking about this pertaining to today's topic of debt consolidation, our guys that are with Improvifi close higher rates at the point of sale because we present more options. We have larger average tickets than most contractors. Why? Because we sell best, better, good. We sell better systems. We just don't give them one option. We have fewer stalled deals because we're giving them options. At the contract, it doesn't say $28,500. It says 12 months, same as cash, $232 a month, or $28,500. Which option works best for you? And then we do that across best, better, and good. So we're giving them 3 options to buy different systems, but we're giving them multiple options within each silo. This helps you sell more. Helps you sell a higher ticket. You stop selling price and you start selling solutions. Call to action. Hey, Chris, this is pretty interesting. I want to learn more about debt consolidation because, man, you're right. I'm a roofing sales pro. I'm a roofing owner. We're feeling it ourselves. Heck, I've even got business loans to help you if you're interested. We have business equity lines of credit through Improvifi and Purple Apple Loans. Let's talk. No pressure. If you're already a client of ours and you're watching this, because I'm going to put this over in school, and this interests you, and you want to get your team on a private Scoville one-on-one on Tuesdays or Thursdays, reach out to your client success manager, and we'll set up a time. If you're not coming to the Wednesday live insider trainings, please come to those. We talk about these topics and more. But if you want to really dive into this, set up a private meeting with your client success manager, and I'll see you on a Tuesday or Thursday. Just mano a mano, me and you and your damn team. If you're not a client of Improvifi, and this sounds exciting and you want to learn more, no pressure. Reach out to Katie at Improvifi.com, and she'll set up a call with one of my consultants. And we are an open book. We will open up the hood. We will show you the pricing and the process and the terms and the training and the support and the technology and the leads. Like, we'll show you everything that we have. And if we're a good match for you, we'll work together. If we're not, at least you learned about what we do that's different, and maybe you'll call us down the road. And I don't even care if you're already offering financing solutions with great lenders like, let me pick on 4 of them. I don't know, Green Sky, Wells Fargo, Synchrony, Service Finance. It doesn't matter if you're already using lending by a good lender. You can plug us in to pick up all the other stuff that they're not buying. So it's okay to have a vast portfolio of solutions that you bring to the point of sale. I mean, ultimately, what's going to happen? We'll all help more people. So this isn't about competing against other lenders. It's about collaborating to help your homeowners more. Plus, all those people that I just mentioned don't have the solutions that we have, so it's okay. Ask better questions. Offer smarter solutions in 2026. Use us to help protect your sale and help protect your homeowners. If you lower the stress and you lower the payment, you'll get more deals done. You'll help more people at the point of sale. You'll get more referrals, reviews, rewards, retention, the R4 method, we call that. You'll get more 5-star reviews. I guarantee you'll get more referrals. You'll sell more. Your sales reps will be happy. You'll be profitable. Your margins will increase. Like, this is all good stuff that we're talking about. But what it really, really keeps coming down to is asking great questions and offering smarter solutions in 2026. I hope that you found this interesting. We're here to help. Reach out anytime. Talk to you soon, and have a blessed day.